This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Page 79. Chapter 12, Assurance Services. What's the, as a result of the Clarity Project, which is not page 79, as a result, international standards on auditing are now separated into 5 separate distinct headings to give them standardization. What are those 5 headings? Introduction.
Definition.
Objectives. Then the definition. Then the requirements. And finally the application. Okay. And what are the standard contents of a clean audit opinion? A clean audit opinion. What are the standard elements within the clean audit opinion? Title. Addressee. Introduction. Well, within the introduction you'll have identification of the financial statements being reported upon, and you'll find also either there or within the next bit you'll find the respective responsibilities of the auditor and the client. And then what comes after that? Scope. And what's in the scope paragraph? Who?
That we of international accounting auditing standards.
The framework, the framework under which we've carried out the audit. And you may find respective responsibilities down within the scope paragraph. It may be down there. Also in the introduction paragraph, I failed to say, didn't I? Within the introduction paragraph now, it's common to find this restriction of liability paragraph that says this report is prepared only because it's required by law and it's addressed to the members as a whole, and to the fullest extent permitted by the law, we accept no responsibility to anybody else who uses it or into whose possession this document comes without our prior written permission. So we have no responsibility to anybody other than the company acting through its majority of members, so the members as a whole, not even members individually. What was the case where that was confirmed relatively recently? No? It was a Caparo case, where the auditors reported and a member, Caparo, holding 7%, said we were a member and therefore you have a responsibility to us, and the House of Lords, now the Supreme Court, said no, the responsibility of the auditor is to the members in aggregate rather than members individually. It was questioned in a Scottish court, in a Scottish case, where the judge said it's time that auditors stopped hiding behind this principle, and it accepted the fact that the audit firms accepted the fact that other people will be using their audit report and will be using it to make investment decisions. But that was a Scottish case. Do you remember it? Royal Bank of Scotland and Bannerman. Royal Bank of Scotland and Bannerman. But that was a Scottish case, and that's not binding on English courts. And since then, as a result of that case, we now have this limitation of liability paragraph within a standard audit report. So we've done the scope paragraph. There may be another paragraph before the big one. What's the big one? What's the main purpose of the audit report? It's to express an opinion, but there may be another paragraph or 2 or more paragraphs before that, and they would be the causes of the qualification. So we've got the causes, the reasons for the qualification, and then the opinion paragraph, a clear statement of opinion about the auditor's view of the truth and fairness of the financial statements. After that may come what? An emphasis of matter, where the auditor's opinion is not affected anyway, and it often starts with the words, without qualifying our opinion above, we draw to your attention, and then we draw the attention to something which is already within the financial statements. Okay, I mentioned their qualification or modification. The emphasis of matter is a modified audit report, but we could have a modified opinion, and there are 4 ways in which the opinion may be modified. Those 4 ways are subdivided into 2 and then split again into 2 more. So the 2 original split would be what? Disagreement and limitation, and then subdivided again. The limitation may be subdivided, the disagreement may be subdivided. limitation, and they're both the same subdivision. Material, and pervasive, and the wording clearly changes. It's become standard wording. The wording for a material disagreement is except for. The wording for a material uncertainty, a material limitation, is except for might. So, except for any adjustments which might have been necessary if we had been able to get the information. So, material limitation is an except for might. There's also a little additional sentence within the scope paragraph, except the scope of our work was limited. So, in the opinion paragraph, it would say, except for any adjustments which might have been necessary had we been able to get this information, in our opinion, the accounts show true and fair view. For the pervasive ones, pervasive limitation, that would be disclaimer, where we're actually saying we are unable to express an opinion on the truth and fairness. So pervasive are the uncertainties, so pervasive is this limitation of scope, that we're just not able to get enough evidence about a lot of things within the financial statements. And the pervasive disagreement would give rise to what sort of opinion? Come on, you can do this. Adverse. The financial statements do not show a true and fair view because of the pervasive nature of the matters mentioned above. In our opinion, the financial statements do not show a true and fair view. It's the worst way in which a company can have an audit opinion, an audit report, is to say that the financial statements which have been prepared and are the responsibility of management are wrong. They are misleading. Misleading, the other word similar to misleading, could be applied to pervasive uncertainties, pervasive limitation of scope. They are explained and described as being misleading, but probably a better word would be to say they are meaningless rather than misleading. That they are so unsupported by evidence that we are unable really to identify, because of this pervasive limitation of scope, we're unable to say, we're just not able to come to an opinion, and therefore the accounts may be meaningless or are meaningless, whereas if they're wrong, they are strictly misleading. So beware about the use of the words here. Actually, within the ISA, they're both of them. It says pervasive limitation and a pervasive disagreement means that the financial statements are misleading. But in fact, in the limitation of scope, the better word would be meaningless. But who am I to argue against the Financial Reporting Council and the International Auditing Standards Board? I can't argue against them. They did use the words originally misleading and meaningless, and then they changed it, and heaven knows why. Anyway, we're back on page 79, chapter 12. The objective of an assurance engagement is the evaluation of subject matter that's the responsibility of another party, using identified suitable criteria to express a conclusion that provides the user with a level of assurance about that subject matter. It's not an audit. It's not an audit. It is simply assuring people about some element of financial statements, typically. But it doesn't have to be financial statements. It could be other things as well. It could be, for instance, the quality of the internal control system. Elements of an assurance engagement. You have a three-party relationship. The professional accountants, typically the big four, but it doesn't exclude the others. The professional accountant, a responsible party, which is the company, a client, the records or the systems that the professional accountant is looking at, and the intended user. So somebody has asked the company has asked somebody else, for instance, that they want to borrow some money, and the bank would then approach the accountant and say, will you go in and carry out an assurance service exercise to assure us that figures are reasonable and acceptable, or that the system is appropriate. So subject matter, the suitable criteria that we're going to use. These are standards or benchmarks used to evaluate or measure the subject matter, and then there will be a conclusion. The subject matter may be information such as historic or prospective financial information, statistical information, or performance indicators. It could be systems and controls, including things like internal control systems or accounting systems, to assure the third party that things are operating as they should do. It could be behaviour, such as corporate governance, an assurance about the corporate governance procedures which have been adopted and adapted by the company. So it could be something as intangible as attitude, for instance. Compliance with regulation or human resource practices. It's an attest engagement. It's an unusual word. It doesn't feature frequently in English conversation. In an attest engagement, which is what we're looking at, the conclusion relates to an assertion by the company whose records or systems we're looking at, the responsible party. And the assertion is their conclusion, the company's conclusion about the subject matter, based on benchmarks or criteria. And then along comes the professional accountant. And they independently will review, determine, reach a conclusion about the matter that the company has expressed their own conclusion. So we're going to confirm or negate the company's conclusion about this particular subject matter. So the professional accountant can either express a conclusion about the assertion made by the company, or we may provide a conclusion about the subject matter in a form similar to the assertion made by the responsible party. And we can either say, yes, we think that the company's attitude or the company's conclusion is correct, or we can say, in our opinion or in our assessment, we feel that, yes, the internal controls are working adequate. So there's no need to refer back to the company's own assertion. We can make our own assertion without necessarily referring to the company's. In a direct reporting engagement, the professional accountant expresses a conclusion on the subject matter based on suitable criteria, regardless of whether the responsible party has made any written assertion themselves. So it may be that the bank has asked the accountants to go in and consider the strengths of the internal controls where the company itself has not made any assessment. So the bank simply wants reassurance that things are working as they typically would do in a well-run organisation, even though the company itself has not necessarily made such a statement or reached such a conclusion. Professional accountants ordinarily undertake engagements to provide either a high or moderate level of assurance. Engagements are affected by various elements, for instance, the degree of precision associated with the subject matter, the timing and the extent and the nature of the procedures, the sufficiency and appropriate of evidence available. High level means that we have obtained sufficient appropriate evidence to conclude that the subject matter conforms in all material respects with identifiable. Moderate level, we came across moderate level yesterday. Moderate level gives rise to negative assurance. We are not aware of anything to suggest that this is wrong. Whereas the high level assurance says we have carried out our assurance service and we are happy or content, or we can confirm that the system is operating as it should do. So high level assurance is more positive than the moderate level assurance. Where required, the terms of the engagement should be agreed with the party who engages them, and as a result of the agreement between the accountant and the person engaging them to carry out this service, the third party, then you have an engagement letter. Why is it important to have an engagement letter?
To know the scope.
Yeah, it identifies scope, it identifies responsibilities, it identifies any limitations that there may be. The importance of it, that's not the importance, what you've just answered there. The importance of it is that it will prevent disputes or misunderstandings arising. That's the importance of it. If I'd asked you for the matters to be included, then you gave me the right answer, the identification of scope and the responsibilities. But the purpose, the reason, the importance of a letter of engagement is to seek to avoid confusion and misunderstandings in the future. The effective planning is required, as with an audit. Effective planning is always required. Effective planning of any work at all carried out by a professional accountant, it requires effective planning. I made a presentation to the local Chamber of Commerce last week, I think it was, and it wasn't a question of, well, I've been asked to talk for 10 minutes or something about the financial statements of the Chamber of Commerce. I had those financial statements available to me for the 2 weeks before the Chamber of Commerce meeting, and I was able to look at it and identify the particular important areas and what I planned to talk about. Any professional accountant, including you know what you're going to be doing next Tuesday following the Monday holiday. You know what you're going to be doing already. You know already that over the weekend you'll be boiling eggs and then painting them and celebrating the Christian tradition of Easter. The criteria to be used in the engagement must be considered, because these criteria will affect the amount of work required. Suitable criteria must be relevant, reliable, neutral, understandable and complete. Sufficient appropriate evidence is required on which the conclusion is based. Where do we come across the expression sufficient appropriate audit evidence? We came across that, I think it was Wednesday, but it might have been Thursday. Where do we come across sufficient appropriate audit evidence? When you're doing an audit, you have to gather sufficient appropriate audit evidence. Define sufficient. When is sufficient sufficient? When it is sufficient. That seems fair enough. When it's enough. When there is a sufficiency of audit evidence that the auditor feels justified in reaching a conclusion. What's appropriate? How do you determine whether, when any of you lot is bumping into, on the course of an audit, when you bump into some evidence, does it have a little label on it, a little green label indicating that it is appropriate, or a red label saying that this is not appropriate? How do you know that evidence is appropriate? Well, if it's relevant or if it's reliable. So relevance and reliable. How do we determine that it's relevant? What is it that determines whether evidence is relevant? When it relates to the financial statements, typically, when it relates to the financial statements, and it helps us to confirm one of the assertions within the financial statements. Or what are the assertions within the financial statements? We didn't cover this last 2 days. What are the assertions within the financial statements? That they are complete, accurate, all right. We're looking to see, with reference to assets and therefore and liabilities and therefore the statement of financial position, we're looking to confirm completeness, ownership, valuation, existence and disclosure. With reference to income statement items, we're looking again to see completeness, but we're also looking for the matter that the expense or the income actually relates to the company, which is the equivalent of ownership. We're looking at values to determine whether the value of the expense or the income is correctly stated or materially correctly stated. We're looking at the occurrence of the item. Did the expense actually occur, which is the equivalent for the balance sheet. The balance sheet equivalent is existence. Does the asset or liability exist? For an income or expense, did it actually occur? And disclosure, again, not many items, fewer items referring to income statement require disclosure, but the balance sheet requires a lot of disclosure. A lot of items within the balance sheet have got related notes. There are fewer items within the income statement which have related notes, but there are some, and they require proper disclosure. And these are the assertions that we're checking and we're confirming as auditors, and that will determine whether a piece of evidence is relevant. With reference to reliability, there's 4 trade-offs, aren't there? We're confirming relevance and reliability to determine sufficient appropriate audit evidence, and one of you rightly said that appropriate is relevant and reliable, and I've just talked about relevance. What about reliability and the 4 trade-offs? Some type of evidence is more reliable than others. Externally provided evidence, third-party confirmations, is more reliable than internal confirmations. Something else? Written is better than oral, is again preferred. Oral evidence doesn't help you in a court of law case where you're being sued for negligence. It doesn't help to say, well, I'm sure that the directors are, I overheard a conversation. That doesn't help you at all. So written evidence is preferable to oral evidence. Another one? Original, yeah, original evidence is better than copied evidence. And finally, auditor-generated evidence is best of all. The auditor-generated evidence is preferable to evidence which is provided without asking by the directors. So auditor-generated, where the auditor carries out, for instance, their own analytical procedures, that's auditor-generated. Or where the auditor says, I think I'll write to a selection of receivables and get direct confirmation, that's auditor-generated, rather than the director simply presenting you with a file that says, here are all the written confirmations that we've got for you. That's no good. You can ignore those because the directors have had an involvement within them. If the directors present you with a file of written evidence from the receivables that confirm the balances at the year end, you would approach that file with what sort of mental attitude? A healthy degree of professional scepticism. And I read you an article from the Financial Reporting Council and the Audit Investigation Unit. I read you an article yesterday, which I'd read just recently, or yesterday I'd read it, within Accountancy Age, and the two second division firms had been warned or advised that they should improve their degree of professional scepticism. A more robust, a more strict degree of professional scepticism. So we're moving away now, strengthening the concept of a healthy degree of professional scepticism to make it even more a greater degree of professional scepticism. Let's go back to page 80. Work required, we've just dealt with that, I think. Oh, last bullet point there. Sufficient appropriate evidence is required on which the conclusion is to be based. Sufficient documentation should be retained to provide evidence to support the conclusions. We came across that yesterday afternoon. We came across it with agreed upon procedures. We came across it with a review engagement. We need to retain the documentation which will support the conclusion that we are going to express. Form and content of reports, you could have written this yourselves as a result of yesterday. International standard does not stipulate standardized format. Different wording will have to be used dependent upon the engagement. A conclusion, though, conveying a high level of assurance about subject matter should usually be provided, with the report containing a clear expression of opinion. The contents of the report, this you can guess. Title and addressee, and at the bottom, name, address and date, yeah? And then in the middle, introductory paragraph explaining what it is that we're doing. Reference to the ISA, that say we carried out our work in accordance with the ISA. Just above the name, address and date, you've got the conclusion, a clear expression of opinion. An opinion is to be given, in our opinion, the systems are adequate or are appropriate. And then we've got the middle section, identifying the scope of the work that we've done. It fits into the format of an ordinary standard audit report with the introduction, scope, and opinion or conclusion paragraph. Just looking at page 80 down at the bottom there, title, addressee, description of the engagement and identification. A statement to identify the responsible party and describe our responsibilities. If it's for restricted purpose and restricted distribution, and then identification of those parties to whom it is restricted, and why it was prepared. Identification of the standard, the auditing standard under which the engagement was conducted, the criteria against which the subject matter was measured, a conclusion in possibly, hopefully not, but possibly a conclusion together with any reservations or denial of a conclusion, the date, the name and address. Page 81, risk assessment. I think this is a P3 subject, isn't it? Business analysis. Identification of business risks, how they're managed, a favourite topic of the examiner. It really is. It's one of the three risk questions that the examiner will regularly ask. What are the three risk questions? Financial statement risk, business risk and audit risk, okay? And when you read a question in the exam in just less than 10 weeks' time, when you read a question in the exam, you must make sure that you're answering the right one and that you don't start wandering off into audit risk elements when it's a business risk question. And the question will typically, in an exam, it will typically say, identify and explain. And the common tendency or the common failure of students in this exam is to identify but not explain. And if you do that for a 12-mark question, you're only going to be scoring a quarter of the marks, half a mark for the identification and 1.5 for the explanation. And if you fail to answer the full question, you're not going to score the full marks. So be very, very careful. And take your highlight pen into the exam and highlight the word "and" within the question requirement, so that when you look back at the question, having completed your plan, when you look back at the question, you can see, have I addressed the full question? Is my plan, if I were to write it out, does it fully answer the question in the form it has been asked? So be very, very careful. Risk assessment, whether it be business risk, financial statement risk, or audit risk, is a very, very common question within the exam. In practice, an audit firm may be engaged to give assurance on the management of these risks, and it's now good governance practice to identify, if you look in the DEVRO accounts for 2011, I forgot what the page numbers, but if you look in those DEVRO accounts, there's a double page of 9 risks which they have identified, the implication of those risks, and the way in which the company is seeking to mitigate those risks. It's on page 1415 of the DEVRO 2011 accounts. The risks, just briefly, the loss of market share or profit margins due to increased competition, disruption of supply to key raw materials. There's an interesting one, the explanation of the disruption of the supply to key raw materials. The changes in climatic conditions, the second one, a change in climatic conditions or alterations to the feeding methods of livestock could have an impact on the nature of collagen, because collagen is made from animal skin, in turn affecting the productivity and the effectiveness of the group's manufacturing process. Raw material collagen represents, the one above, represents approximately 10% of the group's total operating costs. Foreign exchange movements, they have no way of controlling those, but at least they can mitigate. And if you see down there at the bottom the mitigation steps, the financial impact of foreign exchange rate fluctuations within our operation is mitigated by a policy of hedging a substantial proportion of transactional foreign exchange risk for periods up to 15 months. Impact of changes in regulations affecting food production. Food production is clearly, page 15, food production is clearly highly sensitive, and we can't get involved in producing contaminated food. There was a case recently in China, wasn't there, where a baby food producer was mixing, I don't know what it was, something with the baby food, the formula that they were preparing for babies, and it was proving fatal to babies, and babies died as a result. And I think now, do I remember that the chief executive officer, who happens, and I don't know why I'm saying this because it's not relevant, but it was a woman, I think she was either sentenced to death or certainly life imprisonment. And I think if you go to prison in China for life, then you're in there for life. So, as a food manufacturer, DEVRO has to be constantly aware of safety regulations and hygiene and contamination. It says within the corporate governance report somewhere, it says that they pay great attention to safety of their employees. It's in the corporate social responsibility report. The last paragraph of the Corporate Social Responsibility Report says, we're paying particularly close attention to behavioural safety. Many of the injuries suffered by our staff during 2011 could have been prevented if individuals had chosen to behave differently. Well, of course, that's always the case, isn't it? That any injury or death could have been prevented if you'd acted differently, if you'd driven more slowly, or if you'd not been there, or if you'd chosen to take a different route, then you wouldn't have suffered that injury or death because you wouldn't have been in the place where the injury took place. So it's a strange comment, that one, in the Devereux accounts. Anyway, I'm back on page 81. Management of business risk is critical as directors must safeguard the assets of the entity. It's become more and more common as an acknowledged element of good governance and good management by companies. I think companies have always assessed in their own minds the business risks that they face, but the identification of these risks and the way in which they are mitigated is now more commonly appearing within financial statements. And I think I'm right in saying that the UK Stock Exchange requires some sort of commentary about identification of business risk and how it is mitigated. Identification, many models are used to identify risks, and I've mentioned there 3, Porter's 5 forces, which you've come across in P3. I think maybe also, do you come across it in F9? You do, Porter's 5 forces. Pest analysis and SWOT analysis. Porter's 5 forces, the examination of each of the forces, gives management the opportunity, or it brings to their attention matters to which they should be directing their attention. So the threat from suppliers, the threat from competitors, and from new entrants into the market. As we grow bigger, and it applies to accountancy firms, as accountancy firms grow bigger, then they tend not to want to be involved in the smaller audits, or the sole practitioners, the sole trader type of audit, and they want to concentrate and focus their attention on big companies within their environment, within their economy. But as you concentrate on that and you say, we're not going to carry on as your auditors because you're too small, that leaves the door open for other firms of accountants to pick up those pieces and then themselves grow bigger. So all the time there is an upward growth within the size and focus of firms of accountants. And all the time, therefore, it left space for people like me to go in with my little firm and pick up these pieces and pick up the remainder and make a comfortable living from it. So new entrants into the market, new entrants into information technology market, where Nokia and who are the other big players? Apple, Microsoft, Dell. Well, growing people, it's difficult, I imagine. It's difficult to break into the information technology market because these bigger ones have now got the reputation and people have heard of them and they will continue to go back to them. So I think new entrants in that particular type of market will be a difficult concept. And customers and the threat of customers and substitutes. Has somebody found an alternative way of providing the same product at a substantially lower cost? Are there alternatives to the manufacture of sausage skins? Can you think of anything that you could use instead of a sausage skin to wrap up a sausage? Edible? There may be. In fact, in the risk analysis it says alternative products. Page 14, it says development of non-casing technologies. More than 85% of group's revenue is derived from manufacture and sale of edible collagen casings, primarily for sausages. For many years, several manufacturers of machinery used in food industry have been promoting something called co-extrusion systems for sausages, which don't require sausage skins. I don't know what they do. I don't know whether they strengthen the outside of the sausage and therefore it doesn't need the skin to keep the meat within the sausage. I don't know what co-extrusion involves. But they've been looking at the possible alternatives, and if somebody finds a viable alternative, that's 85% of the Devereux market disappeared. 85% of 237 million sales is a substantial amount. It brings the sales figure down to 35 million. Pest analysis, political, environmental, economic, social and technological. Again, this is an alternative way of viewing the risks which the company faces. Are there any political threats that we may face? Is a new government going to come in and suggest that we should be changing our product, or our product is now declared to be illegal? So political influences may be seen to represent a potential threat. Social legislation, taxation issues, things like being told that you're about to lose 40% of your savings if you bank in Cyprus. Environmental and economic inflation, exchange rates, interest rates, and again, Devro has identified it, the foreign exchange rates are identified as a threat. Inflation, the inability or the changes in climate which makes food production or animal production more expensive because the climatic changes may affect the foodstuffs that the animals eat, and therefore to buy the skins from which we make the sausage skin becomes more expensive. These are threats which are identified. Social welfare issues, and again within the Corporate Social Responsibility report of Devro, I've just read the paragraph to you, that they do pay great attention to the safety of their employees, and they're reducing down to 7.1 days from memory, 7.1 days per million hours lost as a result of accidents requiring outside health assistance, outside health care. So they do pay attention to the social welfare and health and safety issues, and in doing so, they're demonstrating that they're a good corporate, socially responsible organisation. And technological changes. This thing about co-extrusion is a technological change when several manufacturers are experimenting and developing co-extrusion in order that sausage skins themselves are not necessary. So that's a threat as well, a technological change. SWOT analysis, strengths, weaknesses, opportunities and threats. This approach is used to analyse the business internally in order to understand where we are and where we should be aiming, and therefore a strategic plan. The idea is to match strengths with opportunities and convert weaknesses into strengths. And that's what I'm doing here, that's why I'm here, because in the organisation in your neighbouring country, the man running the organisation there, John, said, why do you not open your own office down the way? And he'd seen a threat from one of the big tuition providers who operate in the next country down. He'd seen the threat that if they were to expand northwards, they would take this business from this country. So he suggested to me that I should provide a buffer for him. I should provide a barrier. And if I then was providing a service to students from here, then the big boys from down south would not come up and threaten his income. But it meant that I was threatening his income because I was taking all his income. Well, that didn't matter because our original arrangement was that he would come and work in here and I would go up there and work for him. So he would still get a substantial income from coming down here to work. But now he doesn't. Well, he does, except only on rare occasions. So strengths, weaknesses, opportunities and threats. Matching strengths with opportunities and converting weaknesses into strengths. Analysing the risks, risk analysis, it needs to be evaluated and quantified. And this is Mendelow's matrix, isn't it? We came across Mendelow when we did P1. If you've not yet done P1, and I understand that some of you haven't, then we come across Mendelow and his matrix, where we have a matrix of impact and likelihood. And we need to allocate into one of the boxes the likely impact and the likely probability of an occurrence taking place. And if it is high impact and high likelihood, then this does require immediate action to be taken. And at the extreme opposite, if it's low impact and low likelihood, then we simply keep it under review. And then the mixture of high and low, whether it be high-low or low-high, if it's high impact and low likelihood, then we should consider action and develop a contingency plan. Low impact and high likelihood, then we think about what we're going to do. It's not going to affect us greatly, but it's a good chance that it will happen. So consider the impact. We've decided it's low, so we consider how we will react to the situation when it actually does happen, because there's a high likelihood that it will. Control strategies are needed to manage or mitigate the more serious risks identified. If you have a plan of action this is what we shall do if this happens, or back again to planning, then it means that if or when it does happen, it's not going to adversely affect us. It's not a matter of saying, oh, heavens above, we couldn't have foreseen that. You've already got it planned, you've already got your strategy sorted out, and so it should be a smooth transition from the prior occurrence situation to the post-occurrence situation. Like, for instance, me here. The plan, what was I going to do in the event rapidly approaching when I'm deciding I've had enough and I want to retire? And I was struggling. I was really struggling because I've got a responsibility and a duty to my customers, my clients, my students, and I couldn't just close the door. And therefore I have to think about how can I sell my company, how can I sell my business so that there is continuity, because I'm the only tuition provider in the country. And how can I do it? I can't just write you and say it's been lovely knowing you, but I'm retired. And therefore I had to find a way, and the way was found actually for me, where there is a smooth transition between me as I was and me as I now am. Performance measurement. Audit firms may be asked to provide assurance on performance measures, key performance indicators, and the assurance of the key performance indicators. Performance measurement aims to establish how well something or somebody or some activity is doing in relation to previous or expected or benchmark activity. The item may be machine, factory, subsidiary, business as a whole, could be even people. It could be the body that we're looking at, could be an employer, a manager, or a group of staff, a team within the organisation. And performance measures, different measures are appropriate for different businesses. Traditionally, key performance indicators for company, the main one would traditionally be the profit element, or, then breaking that down, revenue compared with costs, or share price, earnings per share, cash flow, return on investment. Financial measures, however, don't give a full picture. And back on the remuneration report of Devro. Just back on the remuneration report, if you look at your Devro accounts, which I've given you, and I'm looking particularly for, there's a graph on page 30, a performance graph, and it's a performance graph of total shareholder return. Total shareholder return is capital growth, that is the movement in the share price, together with dividend stream as a result of owning shares. And if we look at that, you'll see that they're substantially better, in percentage terms, substantially better than either the Financial Times Stock Exchange Small Cap Index, excluding investment trusts, and the FTSE 250 Index, also including investment trusts. You see, they far outperformed the two alternative measures. And total shareholder returns is talked about on page 32, the bottom paragraph there. For awards made to executive directors in the year under review, vesting of 50% of shares awarded is based upon the group's earnings per share before exceptional items, growth, over the relevant performance period. And the other 50% is dependent upon the group's total shareholder return measured over the same period. And it then goes on again about total shareholder return on the next page 33. So total shareholder return is a measure that Devro used, and you'll find that there was a question in P1, I think it's no longer in the P1 revision kit, where the remuneration package of the chief executive was identified, and part of that remuneration package was measured as a percentage or as a performance compared with total shareholder return compared with the all-share index or the FTSE index. So measures are different measures. Performance measures, as I say, tend to be financially orientated, But financial measures, the final bullet point on page 83, financial measures don't give a full picture of a business performance, and increasingly companies are turning to non-financial performance measures. And I heard an article on the radio just 2 days ago where nurses are, in the UK, are no longer trained particularly to care for patients. They're too busy achieving other objectives. And there was an expression, a cliche expression, too posh to wash. And that nurses have lost the concept of some basic caring services like washing patients, and they're too busy doing other things. So there is a move at the moment in the healthcare profession in the UK to suggest that nurses should serve a year as caring assistants and learn how to care for their patients, rather than simply qualify as a nurse and then wander around with a doctor in the hospital, rather than looking after the individual personal needs of the patients. So too posh to wash is a current, today or this week, matter within the minds of the healthcare profession in the UK. So the question, example 1 on page 84, suggests 5 non-financial performance measures that a manufacturing business could use. Manufacturing businesses tend to be more easily thought about than, for instance, the non-profit organisations. So we'll have a look at a non-profit organisation in a minute as well. Just to consider it, it's not actually within your notes, but we'll think about it. So 5 non-financial performance matters, indicators, that a manufacturing business could use internally.
Number of injuries.
Again?
Number of injuries.
Yeah, number of injuries and health and safety then. The number of injuries requiring treatment by a health professional per million hours worked is one that Deborah has had. I know that you and the rest of you should be ashamed. I know that certainly you, Ivana, took Deborah accounts home with you last night and actually sat and read them. We were talking about it this morning. Yes, so health and safety, number of injuries requiring treatment per million hours worked. Something else? Another non-financial performance non-financial performance indicator. Something else?
Sick leaves.
Yes, the incidence of sick leave and the number of days lost as a result of employees calling in sick. In the United States, I understand, they have an allowed number of days that they can take off sick even though they're not sick. They just ring in the morning and say, I'm taking a sick day. Why? Because I want to go to a fashion show. All right, fair enough. You're entitled to these sick days. So sick days, yep, okay. Another one, non-financial performance indicator for a manufacturing business.
Customer complaints.
Customer?
Complaints.
Yeah, customer complaints. The number of complaints from customers and the incidence of our products being returned. And I'm thinking again about that Chinese baby food manufacturer, the number of complaints and the importance and the severity of those complaints. That would be a non-financial performance indicator. Something else? Let somebody else have a go. Let somebody else have a go. Anybody else? Anybody else? Indra, you've normally got something to say.
Maybe number of returned products.
Number of clients?
Of returned production.
Number of clients returning production. I think I've just said that. Number of products being returned. Thomas, have you anything to say?
Maybe number of legal cases. No.
Number of legal cases. Yeah, number of legal cases. Hopefully there are very, very few. But you're not particularly concentrating on manufacturing. Apart from the incidence of product return, you're not focusing your attention on the fact it's a manufacturer. I've got things in my mind about the amount of waste that we produce, whether it's waste raw materials. I was mentioning on Monday, I think, the aluminium sheets that were cut down, the incidence of how many times the skip full of aluminium waste was emptied. So that would be a non-financial performance indicator.
improvements of lines, production lines.
Yeah, improvement of production lines and the level of production, the number of units produced per man hours worked. Another one might be the number of semi-skilled workers compared with the number of skilled workers who are still making the same levels of production or even improved levels of production. Number of machine breakdown hours and the number of times a machine is broken down. All of these will be non-financial performance indicators suggesting or giving information, relevant information, about the efficiency and effectiveness of the performance of the company. All right, that's a manufacturing company. What about the non-profitable, non-profit organisations would be things like, I don't know, what about a chamber of commerce or a hospital or a university? Things like that would be non-profit making organisations, and yet they nevertheless could have sensibly key performance indicators. Let's say, well, what about a chamber of commerce?
Number of inquiries during.
Yeah, number of inquiries, and number of times we've helped to answer an inquiry from a person looking to improve their business in an overseas country. I'm thinking about the British Chamber of Commerce here, and one of the indicators is the number of times that people have called into the office or phoned into the office making inquiry about setting up a company over here or finding a solicitor to help them with a legal matter. Another one simply would be the number of members, and number of members in the different classes of membership. Another one could be the number of events that have been held, whether they be social or business-orientated events. Another one could be the extent of the charitable contributions which have been made by the Chamber to local charities. A hospital would have the incidence of employee turnover and the number of people leaving the hospital compared with the number of people going into hospital. Let me say that again. The number of people leaving the hospital alive compared with the number of people entering it. An examiner, a number of years ago, wrote about key performance indicators. I think it was for P5. And he gave as an illustration the incidence of the number of deaths for a hotel, the incidence of how many people had died whilst being in the hotel. And he wrote it very much tongue-in-cheek, he very much sort of a throwaway identification of a key performance indicator. As a result of that article, he now is complaining that whenever key performance indicators are asked, the number of deaths in the hotel swimming pool is always thrown back at him. So he said there are other key performance indicators other than the number of deaths in the hotel swimming pool. You have to open your mind. You have to be realistic and you draw on your experience of life. You know what hotels do, the number of cases of food poisoning or the amount of food which is thrown away because it's now wasted or out of date. Food which has not been used in production for meals, but food which is now rotten carrots which are now having to be thrown away. The amount of food which is thrown away, the percentage of room occupancy. Hotels tend to work, I think, as an acceptable level. They tend to work on the basis of, I think it's 40% room occupancy. And if they can achieve better than that, then that's a success. At less than that, then they change the manager. I think I mentioned employee turnover and the ability, therefore, of the hotel to maintain and keep their service staff. These would all be key performance indicators. For a university or a school, the number of students going on to higher education, the number of students per teacher would also be an indicator. The number of outside activities that the teachers are prepared to help the students with. Certainly the school I used to go to, they had foreign trips, foreign treks, often through the mountains of places like Romania. They would have trips to Shakespeare plays down in Stratford. They would have obviously all the sporting activities and how well the sporting activities, the sporting teams had done. So all of these are non-financial indicators of the success of the organisation. Systems reliability. Businesses are exposed to risk if their computer systems are unreliable. An audit firm may be asked to give assurance on the reliability of the systems in operation. Was it recently I heard on the radio the Secretary of State in the United States said that the biggest risk that we face is cyber attacks, hacking into the United States computer systems. For a company, because you're unlikely to be called upon by President Obama to assess the risks that the United States face, for a company, what risks do they face with reference to their computer systems? Now, all of you are used to the concept of computer systems, computer records, and you're possibly not even used to the idea of handwritten record keeping. But as a result of the growth and use of computer systems, you should be familiar without me having to talk to you. You should be able to talk to me about the risks that your own companies or your own clients face as a result of using computers. So away you go. What risks do they face? Again?
Loss of data.
Loss of data, yeah, the loss of data, maybe by what? By not backing up on a timely basis, yeah, or on any basis, just not backing up. So loss of data, and loss of data gives rise, that's a big risk, because loss of data then means that you are no longer able to identify, for instance, who your receivables are, and therefore you may find it difficult to collect the money which is due to you, but your payables won't lose the data, so they're continuing to press you to pay, and then you face cash flow problems. And if you've got cash flow problems and the bank says, yes, we can lend you money, show us your up-to-date accounts, you say, well, I can't because I've lost my data, and the bank's now upset, and you finish up heading inexorably towards liquidation. So loss of data is a big issue in computer-based systems. I presume all of you back up on a regular basis as a normal routine. You can buy programs, I'm told that you can buy programs which will automatically back it up into an iCloud or into an eCloud or something, somewhere up there. Did you read about cyberspace and storing data in data clouds? There was an Irish politician who said, well, if you're going to have a data cloud centre, can I suggest that it be in my county, as an Irish member of Parliament, can I suggest that it be in my county rather than anywhere else, because we have the worst weather and our county is always covered by clouds, so we've obviously already got the clouds there available to store all this data. And another member of Parliament called him an idiot, but he put an adjective in front of it, which I'm not prepared to repeat in present company. But he called this man an idiot for thinking about iClouds have got anything to do with meteorological conditions. Yeah, that's one. Loss of data. Give me another one. Unauthorized access to data. People hacking into you and stealing your sensitive and confidential data, maybe stealing your business. There was a case a number of years ago now, there was a case about a funeral home who were often asked by the local medical examiner to come out and visit and pick up a dead body which had been found. And a competing funeral home had hacked into their system, and whenever a call came through to go and collect a body, they went out there, and there was already a funeral van, or already a van from the competitors on site picking up the body that they would otherwise have collected. And it was discovered that they'd been hacking into the funeral home's telephone conversations and computer system. When you key the information into the computer, it says we're going to go out to this particular site. When they got there, there was already the competitor there. So, yes, stealing your business could be a problem with computers. Another one. There was an advert on British television a number of years ago for a new type of cheese. And someone had hacked into their system, and they had changed the advert. And the advert then, it was only shown twice, but the advert said, "Don't buy this cheese, it's horrible stuff." And they'd changed the advert for them and said, "It's dreadful tasting cheese and you shouldn't want to be buying this." And this was published on British television only twice before it was realised what was happening, and they had to immediately withdraw it from the television. I'm trying to remember the name of the cheese. It doesn't matter. The examiner has never asked you for the name of the cheese. So, Lineswold, it was called. Lineswold cheese. And that was hacked into, and that was a danger of the insecure system. Misappropriation of assets, and misdirection, or basically stealing assets. The availability of somebody to get into your system and divert funds into their own bank account. A classic, absolute classic case was when the UK was dropping the halfpenny from its currency. We no longer had a halfpenny. The lowest currency is now 1 penny. And yet many bank accounts, of course, had a half a penny. And so what they would do is they would round some up and they would round some down. That was the intention. But the programmer who had to write the program wrote it so that all these balances were reduced by half a penny down to the nearest 1 penny. But then you have a problem. What are you going to do with all these floating halfpennies? And he said, we need an account to put all these extra halfpennies into. Well, why should it not be my account? And so he diverted all these halfpennies rounded down, or all diverted into his account. Overnight, when the program was installed and all these balances were brought down to the nearest 1 penny, overnight it accumulated over £700,000. There were that many halfpennies in the system. He was a wealthy man overnight. So the failure adequately to secure the integrity of a computer program when it's introduced could give rise to misappropriation on a big scale, and misappropriation of funds. You've had a bank locally, haven't you, where the funds were rather dramatically misappropriated? Yeah. So in situations like that, you're exposed to business risk. The business risk where assets are misappropriated, or your business is stolen, or you just lose your data. Electronic commerce on page 85. I was just looking at that this morning before you all arrived, and I'm thinking, I don't really have anything to say on this other than what's written down on page 85. I'm going to ask you, therefore, to read page 85, 86. I'll sit here and watch you read it, but otherwise I don't think I've got anything to say. Well, wasn't it BlackBerry? It was BlackBerry recently, wasn't it, whose system went down for 4 days, and people with BlackBerry phones were finding that their business and communications were totally disrupted. Am I right? It was BlackBerry, wasn't it? Do you remember? And companies have provided all their employees with a BlackBerry phone, and because the BlackBerry system went down, nobody was able to communicate with anyone. They had to use their own private phones. That was reputational risk, but that's also a problem with computers. That one of the risks of having a computer system is that unless the program is thoroughly tested before it's implemented, you can face a quite damaging disaster like that. One of the banks here had a problem. They updated their system about 2 weeks, 3 weeks ago. I couldn't get access to my bank account, so I was not able, therefore, to make payments. And an apology was put on their homepage the day after it had been repaired. This noise next door is very disturbing, isn't it? Do you find you're disturbed by this noise next door? I am. I'm disturbed by it. No, it's this way, I think. It's the next conference room, isn't it? Just thinking to myself, I'm just reading this through at the same time as you are, and I'm thinking to myself, for instance, the assessment of internal controls. Assessment of controls becomes more complex as technology advances. The audit firm must consider the following in order to assess. And I'm imagining myself being a student and facing this exam in 10 weeks' time. And I'm thinking, I'm preparing for the exam and saying, I must learn this. I think that's wrong. I think that's not necessary. You can't learn that, can you? How many servers does it need? What processing methods are used? There's another one, isn't it? Oh yeah, how is the network configured? You can't do that. The only thing you can do is apply common sense. This is a common sense exam. It's a common sense exam. And you need to draw on your experiences from being undergraduates of the University of Life. You need to draw on your experiences. You need to put into your exam answers common sense points that you yourself have come across either at your clients or at work yourself if you're not working for an audit firm, or just from normal things that in a business which uses computer system. How is it protected? How do we have firewalls? How many servers? What happens if we have server breakdown? Do we have a support system? How often is the system maintained? Preventative maintenance. This is common sense. This is not something you can sit and learn and say, there are 6 points at the bottom of page 85, I must try and remember them. It's just bringing to your attention points that you might have thought of yourself and that you could, in an exam situation, could replicate into the exam answer. Security. How good are general internal controls? These are obvious. I feel a little bit guilty about these because they are obvious, but it's the same with the whole of the auditing notes that we've gone through, all 84 previous pages. Most of it is common sense. It's just bringing back to your attention matters which you may have forgotten or which wouldn't immediately spring to mind. Email reduces paperwork. The risk that unauthorized emails can result in unauthorized processing. So access controls are important. Well, of course they are. Electronic data interchange. There was a question asked by the previous examiner, actually it wasn't this examiner. There was a question asked specifically about web trust and electronic data interchange, and that's why it's in these notes. It rarely comes up as an exam question. It's simply telling you what it is. It refers to the exchange of electronic business documents between trading partners. It involves no papers and no human input. We need to have controls in place to make sure that the data which is exchanged is authentic, is genuine, is secure. And web trust, this independent way of confirming that a company's systems are secure. It creates confidence in consumers and entities who conduct business transactions over the net. If you have the web trust seal, it provides some assurance that it's secure, that the site is secure.